And hey, Will, you and I have talked about the geopolitical risk. It hasn't been a big factor in the price, has it?
No, the market is fixated on prospects for the global economy, the outlook for the trade war, and the outlook for global oil demand. And that's really what's driving the market now. And it's been an ugly week for crude, as you say, back in a bear market, down for 3 days on the trot. Brent is down to another 2.5% today. It's at a level we haven't seen since January. So 3% now. So it's really, really not good. And as I say, most investors are fixed on demand, and we're seeing people slowly cut their demand forecast for this year. JP Morgan is now down at a demand growth number of about 800,000 barrels a day. If that happens, that would be the lowest since 2011. The widely watched International Energy Agency is still forecasting growth of about 1.2 million barrels a day, but they will make a monthly report on Friday, and most people expect them to shave those numbers. So people are bringing down their demand estimates. They're worried that demand will get even worse if we see a worsening trade war and a worsening slowdown in global demand, and that's making them focus on a potential oversupply. Shale is still growing from the US, albeit at a slower rate, but people expect it to grow this year and next year. So what does that mean? It's going to mean some very tough choices for OPEC going into next year. Most people expected they might have to think about deeper supply cuts in 2020 to avoid seeing prices go much lower. I think that the attention is going to turn quite quickly if we see these market trends continue to whether they have to have that discussion earlier in the last 3 months of this year.
Well, just talk to me about the spread, the difference between the reality that we experience in the here and now in the demand front and the perception about the future. We reflected on the New Zealand Central Bank decision today, and the realised data for them is okay. For them, it's about the outlook. And I wonder if the same applies to crude right now. Do you see any demand weakness at all from some of the major importers, the major consumers of crude at the moment?
Well, look, this is the time of year where crude demand holds up really well. It's a driving season in the US. It's when demand peaks. But there are sectors of the demand picture which are weak. If we think back to big oil earnings last week, the Shell CEO was on Bloomberg television saying that in the chemicals business, for example, a big end use for crude oil, he's seeing signs of a synchronized slowdown globally. I think that people see that in the more industrial sectors of oil demand, in the lubricants, in the chemicals, in diesel to some extent. They're not seeing it so much in the consumer end, in jet fuel and gasoline, but the signs are there. They're not just broadly based yet.